welcome. My name's Cann with Harbour Insight, and with me I have Hayden, Locke, Chief Executive of Marimaca. Marimaca is focused on its namesake project in Chile, and this is part of a series of conversations we're having with Hayden to find out what's been going on and what's coming next for Marimaca. Thanks for joining us, Hayden.
Thanks, Chris.
A lot of stuff happening on the ground, obviously, but then corporately as well. You guys have been really active. Starting with a listing in Australia, we've talked about liquidity challenges that have been on deck for a bit, and obviously the listing is part of addressing that. What are the other reasons for setting yourselves up on the ASX?
Well, as a company, we're at an inflection point in our development, and we are, now that we have visibility on the permitting timelines, and we're about to deliver our DFS, and we're going into the next phase of development, with a logical conclusion being that we're going to start to look to try and commence construction. Our capital needs go up quite significantly, and so the fundamental reason was we're looking to broaden the pool of capital. There are numerous Australian investors who can't invest directly on the TSX. There are numerous who can, but lots who can only invest if you have an ASX listing. And so we are keeping the dual listing just to expand the potential reach of our pool of capital as we go to that next phase of development.
Why Australia? Obviously there's a very mining friendly culture there. Australian connections, management and supporters, know a lot of people on the ground there. Did you look at other listing options, looking particularly at Europe, where historically bigger pools of capital have been available as you go into that development CapEx kind of period, or was Australia always going to be the dual listing option for you?
We did an examination of all of the major exchanges, and the conclusion that we came to, having looked at the data around amount of capital raised for mining specifically, but also junior mining, Australia is a significantly larger market than just about every other market globally. And so that was really interesting for us. I mean, to give you an example, over the last 5 years, it looks like Australia's raised about 3 times as much capital for mining projects, not even accounting for the sort of inflation of those numbers in Canada through the flow-through tax financing effects. So actually it's probably more than 3 times as much capital. But what was really interesting for me was the average deal size was also smaller, which I think the read-through is that there's more risk capital available for the smaller end of the mining spectrum, which is obviously where we sit at the moment. So that was part of the reason that we went to look at Australia. We did some early marketing and the feedback was very positive. We had a view that there was a lack of really good investable development stage copper stocks in Australia, and so we would fill a niche and get a lot of attention, which has proven to be the case. And so that's been the real driver for our strategy there, as opposed to going to, say, the US market or to London.
Okay. And outwardly, you're doing all the things that you would expect to see for a group that, as you say, is a development company looking to build a mine and then naturally become a miner. Greenstone is the cornerstone investor, private equity, typically looking for an exit, and they've been sat in there for a while. How are you balancing those potentially competing objectives of wanting to build a mine and see what this project looks like regionally as well from an exploration perspective, and the needs of your cornerstone investor?
Yeah, it's not a very well kept secret that Greenstone is a private equity fund that will need an exit at some point. At the moment, they're pretty relaxed, and they see the value that we're creating and are supportive of the exploration strategy. But you're absolutely right; they will need an exit, and I think that was another reason for going to the ASX, was to provide them with an alternative to the logical thing to do, which is just to put the whole company up for sale. We as a management team see a lot of potential value in creating a new copper story, but at the end of the day, we do work for our shareholders, and if somebody makes a compelling offer which is better than the alternative that we're presenting, which is to build the project, then we will certainly support that. So yes, they will need an exit. There are numerous ways that they can get an exit. I mean, if we look at history around Capstone as an example, Capstone Copper, they listed on the ASX. They had a significant shareholder in Orion who, in an orderly way, sold out in block trades to the ASX, which was very well received and was a good result for all of the people involved. And so we've been presenting that as an alternative to, just selling the company.
Okay. And the various things that you've got going on kind of touched on, and we have just discussed these at reasonable length in other conversations, but there is the development of Marimaca and the DFS that's coming out. There's the exploration story, and obviously some of the corporate activity and the consolidation that's been going on as well. What are the things that investors in the market in general should be looking out for over the next 12 months? And is there a potential risk that with that need to try and make things interesting as you go through that Lassonde trough, that the market gets a little bit confused and lacks focus around what you're actually driving towards?
Yeah, there's always that risk, and so we try to be as clear as we can, which is that it's a dual track value creation strategy. The key and number one focus for us as a company is the Marimaca oxide project and getting that to production. So the things to look out for there are obviously delivering the definitive feasibility study. We're in our debt process at the moment, talking to debt providers. We've been out for quite a while for early engagement. That'll kick off in earnest as the DFS reaches its conclusion. The permitting, which will, we believe, be achieved towards the end of this year. The continued expansion of our owners team. So over the course of this year, we're looking to make material progress in the main project. And then the second parallel item is really about exploration, which in many ways is complementary to Marimaca anyway. We're talking about a growth story. And if we get lucky and make a sulfide discovery, well, that's fantastic. That's a fantastic thing for us to have to explain.
Okay, you touched on the financing part of it. You're talking about debt. What does the overall financing package look like in terms of, will it be strategics, will there be offtake, will it be debt, how much equity is going to be involved?
Well, we don't know the final answer yet because the numbers will come out of the definitive feasibility study, but our expectation is that the total number for pre-production capital costs should be somewhere between $500 and $600 million US, which would mean our total financing would be somewhere between 550 and 650 million. We've gone out for expressions of interest with banks based on models that we're running internally, and the answer in terms of debt capacity is this project is incredibly financeable. It could take a lot of debt. We're not going to make that decision because we're naturally a little bit more conservative, but it can certainly take a fairly high leverage ratio. My expectation is we should be targeting somewhere around the $300 to $325 million of debt, and then the rest filled with equity. So that's between 200 and maybe $300 million of equity. In terms of the equity sources, I mean, we are relatively spoilt for a small scale company. We have Mitsubishi Corp, one of the preeminent LATAM copper investors, as a strategic investor who obviously would have the capability to underwrite that whole capital raise. And then we have two other shareholders in Assor who recently acquired Tembo's stake, who have the capacity for significant investment, and Itaki, a London-based fund, who also have significant capacity. So on the equity side, I feel relatively comfortable we can get the mine financed. I think the bigger question is trying to address the liquidity issue, which you referred to, through a broader spread of investors. We have historically been very concentrated in our share ownership, which has manifested itself negatively in lack of liquidity. We would like to address that by having more supportive groups in as we go through the next phase of development.
Okay, and immediately the activities that we've discussed in this series of interviews are fairly diverse. There's a lot of different things happening and generally fairly aggressively. All this requires money. Before that major capital raising, what's the cash in the bank look like, and have you got enough without going to market before, say, mid or the end of the year?
So everything we've got going on at the moment is funded. At the end of last year, we had about $20 million on the balance sheet. All of that has been earmarked for either exploration or project development milestones. But yes, we are well funded. But like all junior companies, without cash flow, there is a need for further financing. I think the strategy that we're debating at the moment at the board level is how do we go about that capital market strategy? Do we do a small capital raise now to aid some development with another capital raise pre-construction financing for further development? Do we raise a larger sum now and really hoist our flag to the mast and say we're really going for this build? Do we wait until the construction, because we could probably get to FID with our current cash balance? I don't think it would be optimal, but we could probably do it. So those are the debates that are occurring. What's our best strategy here? over the course of the next little while. I think one of the things that is taken into consideration is copper is going through a resurgence. There's a big focus on it, and my experience is the windows can open and close relatively quickly. And from a just pure de-risking standpoint, I would always prefer to have more money in place than less in order to keep progressing regardless of what happens.
The implication of that statement seems to be that the window is very much open, and you're talking about these options as if it's if you want to as opposed to if you can. Is that the right read on that statement?
Absolutely. Yeah, absolutely. I mean, the level of engagement we've had from investors over the past 3 to 4 months has been amazing, and it's really common feedback across all of the investors that we've met is we love copper. We want to invest. We're very long the producers, and now we're looking further down to see whether there's better value to be had in the development. And there's not a huge number of developers with a relatively short period to first production, which is where we fit. And then there's obviously the exploration stories where there's a lot of interest as well. So it's been a very interesting couple of months in terms of engagement with the investment community.
And you mentioned risk profile, the past 12 months, but just generally you've done a lot of work to de-risk the project. Permitting has been a big part of that, and you've had some great milestones on that front too, which I think is the main thing investors will be looking at. Just taking Chile as a jurisdiction from a broader perspective, changes in government, attitudes towards the sector, how are you reading changes that are happening on the ground there, and probably more at maybe a federal government level that could potentially affect what you're doing at Marimaca?
I've made the comment previously that when I first started at Marimaca in 2019, there was a lot of uncertainty about what was happening in Chile. That's all behind us now, and it's a much more stable footing. And I think there is a very strong rhetoric from the government about the mining industry being important for the Chilean economy. I think it's fairly obvious. It's very similar to Australia in that way. It is a significant part of the economy. There's always the risk that the rhetoric doesn't match the actions. And so we've been waiting to see how the actions match what President Boric has been saying, and we've been very pleasantly surprised. And I think that's really being seen in our engagement with the government and them pushing projects to go through the permitting process and really supporting mining companies and saying, if you do the right thing and you mitigate the risks, then we will support you in your development. So at the moment, I'd describe it as a following wind. But as with all of these things, things can change quickly, and so we monitor the situation, and we're looking to get ourselves permitted in this nice window of a fair following wind to support us.
Is there a difference between what happens at regional, local level and what you're hearing from the federal government in terms of that following wind?
It is dependent on the region of the country that you operate in, which is similar to every other country in the world. It's not, you can't say one area is very good, therefore the whole country is very good. One area is very bad, therefore the whole country is bad. But the leadership definitely comes from the central government, and they provide leadership to the regional, but each of the regional groups act with autonomy. Our engagement with the Antofagasta region, which is one of the most important mining regions in the world, has been fantastic, but it's been nice to see a very strong sort of overarching leadership from the central government that supports the decision making in Antofagasta.
Hayden, that's all we've got time for, but thanks for speaking with us.
Thanks, Chris.